just a moment. You know, when you talk about that wheel, you know, and you've drawn a link. He talked about 3 key areas in the non-oil sector. He talked about manufacturing, he talked about the solid mineral sector, and he also talked about agriculture. He talked about how these 3 major sectors have, you know, seen declines consistently, you know, over a period. Interestingly, however, transportation was one of the major drivers. Transportation as a sector grew. I'm also quite excited that broadcasting contributed 21% to it. But then, you know, someone would say, how is it that transportation is growing, but this sectors, especially when you talk about the link between agriculture and manufacturing, which is transported through, you know, the transportation sector, is growing? How do we draw that connection?
No, the connection is quite simple. It's actually the investment going into that sector. That's what's, you know, showing that robust growth that you're seeing in the transportation sector. Now, until you finish your work there, then you cannot convey your goods. Now, at the same time, just like he said, which is quite clear, the security, the issue we are having with the herdsmen and the farmers clash, you know, is also is contributing to the fact that a lot of people are not going to the farms to cultivate. And then again, we have to also look at this thing. You see, the Anchor Borrowers program, a lot of people will say, yes, it's a fantastic program, but we need to do a whole lot more. Because, you know, going into research to see if you x-ray the sector properly, you will see that we still have a lot of uncultivated land in Nigeria, but they are virgin land. Now, for you to cultivate in such land, you have to invest a whole lot of money in trying to do stumping, clearing, technically clearing those land are, you know, things that will, you know, take a whole lot of funds and investment. So you see, everybody will have to come together. The interactions within all the sectors have to come together for us to actually achieve the results that we want to achieve. Then again, we have to also look at how the policies that the federal government is coming out with, how the state government are also marrying those, you know, or you know, getting into it or, you know, flowing with it. If the state governments don't flow with it, you will not have as much result as you want to have.
What do you think is going on with the manufacturing sector? They have always identified, you know, high interest rates and what they call it now, power as some of their major challenges. But we see that some work is being done to try and get the interest rates to be lower. We also see that there is this policy between Nigeria and China on currency exchange. Don't you think that these policies ought to have shown an effect on the results that we're seeing from the manufacturing sector? It doesn't seem to be having much of an effect there.
No, you see, it won't be so significant, truth being told. You see, because you still need to do what I call a raw material supply strategy, which most of the industries will still deal with things that will come from either the farm or the solid mineral sector. So if you don't, if there's an attack on your agriculture, it would definitely affect the manufacturing sector. Because, I mean, where are you going to get the raw material from to turn some of these things to finished goods? These are things that you still have to source from the farms, you know, basically, or you import these things. Now, if, for example, you say you want to make candy, for example. Now, every candy that you see in Nigeria is gotten from 3 major components: glucose syrup, the coloration, and then the what gives it the taste, you know. Now, these 3 things, looking at it clearly, all come from either India or China. So we still need to depend on importing some of these raw materials into Nigeria so that you can manufacture in Nigeria.
Yeah, that's what I'm saying. So given that the currency has been relatively stable, I mean, the exchange rate has been relatively stable, and we've also seen that swap, shouldn't it have some positive effect on, you know, the manufacturing sector? Yeah,
it will. That's if you're doing new, let's say you want to set up a new plant, the swap will actually affect, you know, the cost of setting up your plant. And then if the raw material is coming from China, now that will also, but these things are not, they're not so significant in the sense that it doesn't change the narrative drastically. No, you still have to that we still have this pocket of issues that you have to solve so that the will, like I said, will all be, in equilibrium.
Mr. Ukuku, I want to just take a quick look at employment generation and wealth creation, because ultimately, whether we're looking at one sector or the other, it comes down to whether or not we have enough human beings, enough Nigerians involved in participating in those sectors. When you look at the banking sector in the country today, and you know that about 2% of credit facilities, of loan facilities, are going to, ordinary Nigerians, middle class to lower class Nigerians, and that 98% of loan facilities are going to major corporations or high income Nigerians. You're talking about obviously 90% rate of exclusion in terms of credit facilities going to small and medium scale enterprises. You compare that to South Africa, it's about 45%. Yeah. So when you look at these kinds of numbers and you ask yourself, why is it that our banking industry isn't tapping into the ingenuity and productivity of ordinary Nigerians, which comprise the bulk of the population? What needs to be done to ensure that we can reverse that trend?
Okay, it's very simple. First things first, you have to solve the problem of bootstrapping, which is giving support to small and medium enterprises to get to a level where they become bankable. Now, to solve that problem, you have to have some level of intervention around venture capital support, being able to, the MSME clinics, being able to boost transactions to a level where they become bankable. Number two, the Development Finance Department of the Central Bank, they need to be a bit more creative, knowing that we have things that affect us. Now, a country like South Africa, if you look at, you have identification system that works or that have worked. Now, we're still struggling with our identification in Nigeria. Now, until you solve that, let me relate that. Now, if I lend money to an individual the small-scale businessman who probably lives in a rented apartment, doing his business in a rented, premises. If he disappears tomorrow after collecting those funds, how will I find him? So sometimes we have to look at this thing holistically, because if a bank has funds, this monies belong to shareholders. They are accountable to their shareholders. So they can't take the risk of giving those monies to small people, small and medium enterprises that you can't hold on to when the time comes for either payback or if the loan goes bad. So these are the issues that we need to look at.
As much as I understand your position, I want to be very clear here. When you talk about the bank verification number, the BVN, of course, and even to open up a bank account, there's obviously some information and some documents that must be provided. The core information is there. While I agree that, obviously we have issues with biodata management in the country, if that core information is there, at what point do we need to introduce, like they have in developed countries around the world, including South Africa, a credit reporting system that, in which if you take out a loan, for example, no matter how small, and you decide to default on that loan, essentially your credit rating plummets, and therefore you can no longer participate in that kind of a loan agreement in the future. If we have such, don't you think that would go a long way in taking out the bad from the good?
Of course it will. It will, to go a long way. Like I said, that's just one side of it. The other side is, like I mentioned earlier, you have to also be able to get these people to become bankable, because there are certain requirements that there's statutory requirements that you must come up with before a bank will want to lend money to you. Let's take, for example, for a business plan. Let's say you want to set up a cassava processing plant. You need to have your land acquired. You need to also have your farm in place, or where you're going to aggregate your cassava from. You need to have a land where you're going to put the plant itself. So, and all this will cost you money. You must have EIA done. There's an environmental impact assessment done on the same location. So you need to also have, gotten your tax clearance done. So these are the things you must spend money on before you get to a bank, before a bank can even talk to you. So for me, we have to focus a bit more on trying to solve or midwife or support people to get to that level where they will begin to ask for funding. Because if you just say, okay, let's solve the problem of, providing finance from the commercial bank or from the development banks, we will not be able to solve the problem.
But the big boys default all the time, you know, in spite of the fact that they're able to get them. They're the ones who usually put the banking sector in trouble.
Okay, those are the impunities. You know, you can see what, you know, the government is trying to see how we can stop such things from happening. Yeah, it's true, because I mean, from the figures from central bank, you know, it was in 2014. I saw those figures in the presentation from the central bank. About 220 billion that was meant to support MSMEs, given to about I think it was about 208 companies. 220 billion to 8 companies. That's an average of 800 million per company. You know, so that means the smallholder business person cannot, you know, get access to those funds. Why? Because the facts I just explained to you. Because they don't have what it takes. They can't even collateralize for these funds, which is another issue that comes up. So until we get, you know, we redesign our development finance strategy, we will still be, you know, on this.
If you're a commercial bank and you give $100 million to an oil company, you're talking about a sector that's high technology, high mechanization, low human, you know, kind of labor intensive, you know, that's low in labor intensity. So when you look at that, and you know that the return is going to maybe be safe because they have the capital to repay.
Of course.
But then, of course, the impact on the economy is limited because it's not a labor-intensive sector. Is it not now ideal for the country, particularly the financial sector, to be able to look at how they can actively engage with ordinary Nigerians to be able to effectively participate, aside from just the banking sector, even microcredit schemes, for example?
Yeah, I mean, this is exactly, I think the federal government is also, you know, wanting to, you know, they're already, you know, giving out loans without collateral to traders and all of that. Those are the kind of things that will support, you know, kind of thing we're talking about, because we see it has to also be a culture for us, being able to take funds from someone and then manage the funds and then pay back the funds. These are things that are not, you know, they're a bit not normal with those in the, you know, in that bracket.
I'm going to ask you to hold your thoughts for us. I'm sure that Mr. Rotimi will definitely have more to say. We'll ask whether or not there is cause for the federal government to indeed be excited, because they seem to be excited about the growth coming from the non-oil sector. In just a moment, please stay with us.